Welcome back, traders. This is our Gold Weekly Review. My name is Angelo Zittis, and this week's title is Risk to Affect Gold Price. Now, gold prices lost some ground in the latest sessions as on Monday until today in the European morning. Traders saw some improvement on financial and political news, which may have removed some risk sentiment. However, we must note that the precious metal has been moving according to various market opinions, which could be referred to as headwinds or tailwinds depending on the headlines, something that provides a new outlook for gold traders and their perception. Fundamentally, some worries over the trade war between US and China have been silenced. In the previous days, US officials noted that the latest talks between the two largest economies have been constructive to the point they could be very near to landing a deal. Even though the ground was prepared since last week, traders may have not really bought into the news, as according to other reports, traders increased their net buying positions for the precious metal in the week to October 29th. However, at this point, so many reports have surfaced, implying they are getting closer to signing a deal, that we would not be surprised to see an unexpected announcement and the two sides signing papers. More evidence to the pre-mentioned was provided by Reuters that noted that Washington was thinking whether they should remove the levies of 15% on various Chinese products enacted back in September 2019. If they are close to a deal, it would make sense for the two sides to compromise and allow the deal to work in favor of both. From a gold trading perspective, no major movement has been observed until now as a result of the matter. Even though some bearish momentum has been noticed in the latest sessions, our opinion is that most of the reaction could be displayed upon official announcement, or better, an agreement. In this case, and in our opinion, the most possible move for gold may be downward. Yet, even though things are looking positive, we remain in a wait-and-see position, keeping a conservative view on the metal's further movement, as past experience on the US Sino matter has shown disappointing scenarios are also possible. Additionally, the updates from the US Sino front have helped the US dollar regain some strength in the latest sessions. The outcome of the previous week's US employment report may have proved positive for the greenback and is also adding more to the opinion that the economy may be still in good shape. Last week, the FOMC delivered a rate cut that enacted a bullish reaction on gold, but the market has given back most of the reaction at this moment. Furthermore, talking about headwinds affecting gold prices, some positive financial releases from around the world in the previous days may have also helped the precious metal from moving higher. From Europe, manufacturing PMI data from France, Germany, and the Eurozone were slightly better than expected, but still considerably low. Even though some improvement is obvious, the Eurozone has a long way to go to regain investors' confidence. Many analysts remain doubtful about the Eurozone's future performance, and gold traders may be keeping an eye for the group's financial developments. Moreover, some upbeat financial performance was also seen in China, as the mainland's factory activity surprisingly expanded at the fastest pace in more than 2 years for October, according to the Gaixin PMI indicator. Analysts noted that both domestic and foreign demand improved significantly, and if this performance is to continue, then China and its economy can be altered to the positive. As a conclusion, upcoming events that may affect gold prices despite updates on the US Sino front is today's US ISM non-manufacturing PMI, and on Friday, the University of Michigan Consumer Sentiment. Also, a long-term view provided by other analysts for gold is that the drivers behind it are still in place, and the risks may even increase in the later months, as economies have not shown clear evidence if they are improving or not. Moving now to our technical analysis, this is gold's 4-hour chart. Gold is currently trading between our R1 1509 resistance level and the S1 1500 support level. Yet, most of the latest activity has been between the R2 1570 resistance line and the R1 resistance level. The R2 1517 resistance level was tested 3 times in October, but was not broken to the upside and could be considered as a make or break level for the bulls. However, if the metal has the buying momentum to surpass the R2, then there are maybe some stops at the R3 1526 level prior to reaching the R4 1533 level that was tested last time on the 25th of September. In the opposite direction, if gold continues to move lower today, then it could further approach the S1 1500 support line. Round number levels could be a target for gold traders, and so this level could prove rather important. Even lower, we could see the S2 1495 level, last seen on the 31st of October. Below our S2 follows the S3 1484 level, last seen on the 30th of October. However, gold was not clearly broken below the S3 since the 16th of October, where the S4 1477 support hurdle was last tested. If you've heard something in this report, make sure you apply it to your trading. That's the whole point. Thank you very much for your time, and we'll see you next week.